Hey everyone, it is Wednesday, August 2nd, and we're going to go over the markets because today, as you can see over on the right hand side, everything is red except for the VIX, of course, because whenever there's craziness in the market, the VIX goes up. But based upon the market selling off today, it's not that big of a deal. We're looking for an even bigger sell-off eventually. Just don't know when that's going to happen because using the MFI down here, I'll enlarge. I'll make this a little bit bigger, easier to see. You can see the last time was close to being on the MFI indicator being oversold, which means when price breaks below the black line is oversold, breaks above it, it is overbought. Last time it was even close to being oversold was way down here in March, and ever since then, price been pretty much riding high, being on overbought levels right here, and actually making a divergence where you're making a higher high in the indicator, and then a lower high in the indicator, but then you're making higher highs on the chart. So you see high in indicator, high on chart, lower on indicator, high on chart. So making that divergence right there. But we've been waiting for it to get a decent sized correction for a while now, ever since when this first went over by territory back in April. You see it went right here, had a small little pause for it, and then just right back up. And we never really had that sell-off until we have this is a weekly chart, by the way, so we're having a nice little weekly bar right here. So it's especially interesting to see what happens on Thursday's market, see if we get a fall through, a push down, and really get this thing to sell off, because it's due. We're waiting for the MFI to get back to being in the oversold area down around here, which it hasn't been for a long time. And as you'll see for the rest of these markets, I mean, pretty much the same thing for the Russell 2000. It was actually really oversold down here back in March, and then went over into the overbought territory, had a little bit pausing for it, and actually had a real big down week that week, but then has gone up ever since for it. The Dow Jones, same sort of thing. Here we were in oversold territory back in March, along with the rest of the markets. Blasted off being overbought, slight pullback. It did have a little bit of sell-off right there, but then went back in overbought territory really fast and has been making a divergence between price and the MFI indicator. So eventually, MFI will go back being into oversold territory. It's just been riding high in overbought for a while now. And then same thing for the NASDAQ. You see back in actually December, back in December, being oversold down here, popped out of there, and it's been just going up ever since. Even though the MFI has been screaming, this thing has been overbought. We'll see if a follow through for the sell-off continues with all the markets, or if we just get this weekly sell-off. As you can see, there hasn't been really two red bars together here ever since this week right in here, where we had three red bars right there. And again, this is the weekly chart, but ever since then, there hasn't been more than one red bar at a time. We haven't had two of them together for it. So we'll see if the sell-off will continue going into next week, and then to eventually pull the MFI down to being oversold, and then we can start looking at really being buyers in the market. And last but not least, crude oil. Here we had back in June, being oversold, shot up straight to being overbought, and crude oil is selling off today as well, being extremely overbought in the MFI. Now going down real quickly, I just want to show you what it looks like for the markets here real quick. There is a trade set up right here, S&P 500, using this pitchfork and the three orange semaphores. You can see price broke below the yellow line right here on the pitchfork, which is the 1.618 level. Broke below it, which signifies we're looking for the next bar, eventually a bar to come up here and hit the yellow line, and that is the initial trade entry for it. So price hit on the next one. So when it does that, you just take the highest point from it, draw the Fibonacci level down to that one, and then the target is the 1.146. So you can say it came pushed down, came close to hitting it, hasn't quite hit it yet. We could call it off, say, hey, this is done, because it's not like I'm looking to get in right here for it. The closest I'd be looking again would be the 50% retracement level, but hopefully even closer back to the midline of the the midline to the pitchfork. And if that happens, then the exit moves to the black line, which was the entry for it. And then last but not least, if price continues to move up without hitting all those and goes up and hits the 1.146 level opposite when that moved, then the exit moves down to the 50% level to it. So we're still looking for another push down to complete that one right there. But as you can see, what I like to do is these blue lines or these teal lines right here are the previous day's extensions using the high and low. There's the high, there's the low, and it's just the 1.146 Fibonacci extension level and the 1.414. So we can see when price opened today, it used the bottom extension level as support, but then we had price, let's move this down. Then we had price just break out of it, and that support turn into resistance, which I'm sure you've heard that phrase plenty of times before. And it continued on, and it's continued on, just selling off ever since then, with potential more room to go for it. Now most of the time when price hits those levels, the 1.44 and 1.46, that's where it's going to stop. You see a pause and reverse, or at least it ends there for the day for that. But occasionally, which doesn't happen too often, occasionally we do get it where it's just a blowout day, and that's what today is, especially here in the S&P 500. Now, for the Russell, it's a little bit different. We can see that price hit the extension level, used the 1.414 as support, came down, hit it again. Looked like with this bar right here, we were going to get a blow and go. It's going to keep on going lower, just like the S&P 500, but it did not. It used it as the support level, and now it has been slightly trending higher, the rest of this day. Dow Jones, same sort of thing. You can see previous day's extensions hit right off the 1.14. Used as really nice support, and is looking like up until, was that 5:55 a.m. may ride higher all the way, even maybe to the other extension level, and it did not. It came right back down. The 1.44 has looked like support, but now just recently, this is here using the 5-minute chart, we're looking like the sell-off is continuing right there, and looking for it to make it a blowout day here in the Dow Jones, just like the S&P 500 as well. Typically, those trade pretty much in tandem, pretty similarly. The Russell 2000 is kind of like the redheaded stepchild. Yes, it's a part of the family, but it kind of does what it wants to do on its own, and isn't blood brothers like the S&P 500 and Dow Jones seem to be. Part of the family, but tends to do its own thing. Then we have the oil right here, and I'll take that off because all I'm looking for right here. Oh, it did form right there. Okay, so we just had a yellow semaphore form right there. So using that one, and this one down here, I'm waiting for price to break out of it. And then when it does, and if it ever comes back and hits for another bar that closes, hits the yellow line, then that would be the original entry point for the trade. But I wouldn't be looking to get into it until at least it comes down to the 50% level for it. But as you can see for today, using the previous day's highs and lows, the extension level came up, almost hit the 1.146, and then has just been a complete sell-off and then drop off, especially with about 7:55 a.m. just complete. How many points is that? About 81.88 down to 79, about $2, and well, I guess $1.91 as far as when that opens. Got it right there. But didn't use the 1.14 as support at all. So we'll see if it will get back up to that range before the price or the market closes today. And then for the NASDAQ has been complete blowout, just like the S&P 500. It initially used it as support. You can see here going between the 1.146 and 1.414. Came down slightly as support, and then that support turned into resistance, just like the S&P 500, and it's been shooting down ever since. One thing to be aware of is when the market did open yesterday afternoon, after this day's close right here, it opened up into Wednesday's market. There was that big gap right there from it, and usually when gaps happen, you expect them to go and get filled. It came close to getting it filled, but did not. You still have that much room for it to come back and get filled. So it's just one thing to be aware of, because normally gaps will eventually come back and get filled. So you do have this this area right here, so that's potential target area to look for as we're moving forward. So whenever we start getting some buy signals, especially when hopefully the MFI will get being overbought and eventually go down to oversold, that will be a good target area to look for this thing to come back and get filled. So anyways, just wanted to show y'all real quick what the market is doing, what we're looking for it, and be safe out there. Thanks, bye.